What is going on, everyone? We are live today. It is Wednesday, July 30th, and today is FOMC day. Here in 10 minutes, we will be getting the results on what does the Fed plan on doing with rate cuts. Are they going to cut them? Are we going to stay paused? We're expecting there to be a pause once again. So if you came in here thinking, man, we're going to get some rate cuts, don't get so hot, so heavy, so fast. It's probably not going to happen. What's going to be more important, though, is what happens in about 40 minutes or so from now, where we will have Jerome Powell live once again from the podium at the FOMC day. How does he answer questions? How does he talk about what went down between him and Trump the other day over in the new Fed building? And what are the future expectations for cuts or lack thereof? This is going to have some massive implications for the crypto markets. Now, what's very interesting is at the same time at 2:30, while we have a little more information about what's going on with it, we're also supposed to hear from Trump's administration about some of the new crypto policies from the government. Very coincidentally, they're wanting to put them out at the same exact time. We're going to do our best to cover all of this and a lot of other news, as well as looking at the charts with you guys. So if you're excited about it, if you're bullish right now, or if you're bearish as well, make sure to smash that like button now. Make sure you're subscribed to the channel. Let's go and bring up the team here. Smay will be in the background. Anyone who misses Smay, he's got some stuff happening in his background, so he will not be on the show today, but he's here. He's pushing the buttons. He's doing his job. I'm joined once again by a man who freshly moved to Virginia. He missed the Friday stream in his move, but he's in the good old Commonwealth of Virginia. Shrum, T. Shrum, he's here. People have been asking about you. People are worried you're gone, especially with this whole brand change to Tim Warren. Really quickly, how are you doing? How is Virginia? And tell people a little bit about what's been going on with you, and then we'll jump into some of the headlines and news and charts before the news comes out.
Well, I've just been loving life, Tim. Better than I deserve, some might say. No, my wife is in the medical field, and we are kind of nomadic. We hunt, and not buffalo, but we hunt medical contracts, temporary ones. And we were actually in Titusville, Florida, not too long ago, and a friend that I made there just texted me. He was like, "What's going on? Are you not on the show anymore?" I am on the show. No, nothing has changed other than kind of the branding. We've done some rebranding for the channel here. I'm loving life, and I'm up in Virginia, the Commonwealth, the great Commonwealth of Virginia, and we're helping people make money.
There we go. Yep. I mean, it's good. People are going to keep asking that question, so help us spread the word. The brand has changed. Nothing else has changed. Shrum is here. Smay is here. I guess the name change. He's going to be going by Taylor Shrum. You're actually hearing me call him Shrum. His legal name, believe it or not, is not T. Shroom. But we're getting a little brand change of the Shrum as well. So you guys can call him T Shroom. I don't think he's going to be offended by it, but you guys will hear me call him Shrum. J-Bot said, I missed why the rebrand. I'll tell you what, J-Bots, go back and watch a couple of our last live streams. We explain last week's Wednesday and Friday. We go into a little bit of detail as to why. Ultimately, it's just a direction to help the brand grow. Broz, as much as the word Broz has been a fun name for the community, it lacks a professionalism. It also makes people believe that we are maybe degenerate crypto gamblers, and that's just not who we are, and that's not the brand. So we made a brand change, but again, everything else staying the exact same. I'm ready to get into the details of today's show, though. We're going to get into FOMC craziness really quickly. Let's take a look at some charts, and then we'll get into the news of what's going on here. Let's go to my screen. Bitcoin right now in a little bit of a break, a little bit of a pause in bullish price action. Of course, we did just hit brand new all-time highs just about a week and change ago, 2 weeks now, I guess, at this point, back on the 14th. I'm on the two-day chart. That's what's messing me up. There we go. Let's go to the daily chart here. We have been consolidating once again. In fact, it looks like we're consolidating in a little bit of a falling channel. These are actually pretty historically bullish. I'm not saying it's impossible to drop back down below these levels, around 114,500 or so. But you guys can see even during this bullish run, let's zoom out here for just a second, dating all the way back even to last fall of 2024, massive. Well, let's go back further, right? You go back over here. Bitcoin ETF comes out, massive explosion, long consolidation in a falling channel. What does this move into? It moves into a very bullish breakout. What happens after this bullish breakout in the fall of 2024? January happens. Everyone thinks crypto is going to go berserk. We have another. Guess what we have, guys? It's a little bit slanted, right? The others are not so far down, but another consolidating channel, descending channel. What happens after this? Well, April comes along and Bitcoin explodes once again. We consolidate in May, explode, consolidate. So in this case, this would suggest if history repeats itself, which it has done several times in this session, I'm going to be a little more conservative here. Upon a breakout for Bitcoin, we really could see a Bitcoin price surge all the way up to about $130,000 as the next spot to watch once the bullishness does continue, right? This is the Bitcoin front. On the flip side, when you look at the crypto space as a whole, while the Bitcoin dominance is climbing here, Bitcoin dominance has been trending to the downside. We're actually kind of watching, is Bitcoin dominance forming for us maybe a little bit of a symmetrical triangle at the end of its own massive pullback here? We have targets, if this does come into fruition, back down below 58%. This would be a massive win, especially if Bitcoin shoots to the upside. Okay, if the charts right now, which they're still saying this is likely, if we shoot to the upside on Bitcoin and go towards 130K at the same time as Bitcoin dominance shooting to the downside, dropping back down below 60% for the first time since way back here. We haven't been below 60% since February. This just screams major bullishness for the Ethereum and altcoin space. Why do I pinpoint Ethereum as sticking out? Because right now Ethereum, anytime you're transitioning from a strong Bitcoin season into altcoin season, you always transfer into altcoins, right? You always transfer into Ethereum and then altcoins. ETH up here holding up very nicely. Even the last couple of days, I'm going to show you some other altcoins. ETH just kind of chilling up here at around $3,800. Dropped a little bit below, maybe rather a little bit higher. But look at comparison on the daily chart to a coin like XRP, where the last couple of days have had a decent little pullback. Solana, decent pullback. Chainlink, decent pullback. Ondo, decent pullback. Ethereum is holding up quite well. And while we watch the Bitcoin dominance chart falling, I'll show you that once again. Take a look at what we have going on the ETH dominance chart. This is ETH over ETH.D, or in other words, the market cap dominance of Ethereum. It is taking off right now to the upside. This is a massive, massive win for altcoin holders. We have not seen this entire bull market. While I still want to see Bitcoin dominance fall below 60% to feel good about altcoin season, all signs right now, if nothing changes, are pointing towards a massive altcoin rally coming. You go into coins like Total 2, which is all of crypto except for Bitcoin. And even though we have some shorter term little pullbacks potentially from a daily perspective, we still have some massive wins and massive bullish momentum on the weekly chart. You can see long term. This is actually something we talked about the other day in our VIP trading group. We got a little bit of a cup and handle or potentially head and shoulders pattern, depending on how you want to look at it. We'll start with the conservative approach. That's a pretty good flat top right there in price action on Total 2. But with the more recent pullback from that double top, that's a very beautiful looking handle formation. You take the breakout of that position, and a conservative approach would suggest that when Total 2, when the crypto market cap excluding Bitcoin exceeds 1.7 trillion, we could shoot all the way up very easily to 3.45 trillion. Let's just make sure we're clear on that. If Bitcoin maintains anywhere around the 60% dominance during that same time frame, or even drops a little bit below, we're talking about almost, and keyword almost, but over a $9 trillion total crypto market cap. What's even crazier, though, is if you were to look at this and say, but Tim, could this not also be perceived as a inverse head and shoulders pattern? Look at this, left shoulder, head, right shoulder. This is a much more explosive potential for the Total 2 chart that could send the price of altcoins, the market cap of altcoins, all the way up towards 6.62 trillion. Again, if Bitcoin had 50% dominance, that means we are looking at over $13 trillion in the crypto space. If you are dipping on crypto, if you are saying, man, I think the top is in or close to in, man, the charts don't necessarily fully agree with you. In fact, we are on the verge of major breakouts coming here very soon. Now, it's 2 o'clock. I want to throw it over to you, Shrum. Shrum, have they announced the official decision? It's 2 o'clock. They should have. I'm going to pull it up on my end, but I don't know if you had it on yours yet.
They have. According to this Twitter account, Solid Intel, believe it or not, the Fed leaves rates unchanged at 4.25. It's unbelievable. No, it's what everybody thought. It's what Polymarket thought. It's what the CME thought. It's what the 3-month bond market thought. Now all eyes are on September. by way of this press conference. We're going to be covering it live here. We're going to hear from Jerome Powell just in moments.
Yeah. So again, as Shrum put it there so eloquently, surprise, surprise, they did not cut rates. Listen, I made a joke on X yesterday. If you guys are not following me over on X, I don't know why you're not following me on X. Let me go to that here real quickly. Go to my screen here, Smay, for me. Make sure you're following me, the real one. I also changed this handle, Tim Warren Trade. So don't fall for the fakes. Make sure you're following this account on X at Tim Warren Trades. That is the real stuff. Of course, you guys are here in the live. We got a lot of news to cover here today, but I made a joke just yesterday as BlackRock predicted the Federal Reserve would not lower interest rates. I told you guys, well, I also predict tomorrow that water will still be wet. Let's start that debate. That's a good debate to start in the chat at the moment. Is water wet? Is it not? Point being, jokes aside, this is not a surprise whatsoever. I know there was some leading up indications. Donald Trump recently has said he believes that Jerome Powell will leave soon. He even kind of made a joke saying, I'll miss him, which we know from recent remarks from Donald Trump, that's not the case. We have several people who have come out saying they believe that the Fed was preparing to cut rates. There was even a rumor out there. You can go off my screen now, Smay. There was a rumor out there that he would cut rates by an entire percentage point. Absolutely ridiculous. Anyone who clung to those and said, I think that's going to happen, you probably were setting yourself up for a massive disappointment. But I'll tell you this right now. The day is not done. You shouldn't be tuning out of the show or giving up on a bull run just yet. Why? Because we all knew that they were going to keep rates paused in July. We're going to talk about some of that news here in just a second. But what's more important is, how does Jerome Powell take the stage today? I would say probably the last 3 to 4 FOMC days, while they're always important to watch, they have been extremely boring and, dare I say, stupid. Why do I call them boring and stupid? Because he doesn't say anything. He keeps pretty much saying, well, we'll assess the data as it comes in. We're a little concerned about inflation with tariffs, but ultimately the job market's strong, inflation is strong, the economy's strong. No reason to cut rates. We'll let you know next month what's going to happen, right? Always a nothing burger. Could today be the day that we hear a shift from a neutral stance, right? He hasn't really been hawkish, but he hasn't been dovish either. Could today be the first day this entire year of 2025 that Jerome Powell flips from being neutral and a nothing burger type of movement to being dovish? And does he start to talk about how the economy is so strong that rate cuts should begin in September, and unless something drastically changes, they could continue for quite some time? That's going to be the big thing that gives us a potential bullish lead here as to what's going on with the FOMC and what's going on with the Fed. Of course, the elephant in the room will also be, does he make any type of comments about recent announcement that he might be stepping down at some point? We've heard from behind the scenes, he's told some of his friends that he's not planning on stepping away, but the public hasn't heard from Jerome Powell himself straight from his mouth. Does he have any intentions to step away, or will he continue to serve out his term? I think that also is going to be something very interesting. I would be very surprised if he's not asked about those comments and those rumors during this meeting. With that said, though, before we get back into it, again, we're going to cover that whole press conference live at 2:30. It is the more important detail of FOMC day. I would love to see a cut sometime soon. That would bring liquidity into the space. We do not get a cut today. But what happens at the press conference will be very important. Let's check the charts really quickly. Just make sure there's nothing crazy happening here. If I were to drop all the way down to the 5-minute chart, let's take a look. There has been a little bit of a dip since the announcement. Now, again, I don't know why there's been a dip. No one should have been preparing for a cut. You can see a little spike up to 118, and then now we've dropped down as low as 117, but we're still consolidating here. The only constant on FOMC days is that you have extreme volatility of emotions. People get bearish, people get bullish. It trades like crazy. I'm going to continue to say that I am bullish right now. I would say as long as we don't drop below 114.6, 114.5, I already laid out for you guys, this is a very bullish formation that has support back down here towards those lower $114,000 levels. If we lose this support level, all right, all of a sudden there probably are some bigger issues to look at. I would say at that point, you're probably looking at Bitcoin making a move back down towards $112,000. But if we're able to defend that throughout this entire meeting, and better yet, if for some reason in the next 24 hours we exceed prices back up and get back above $120,000, all of a sudden that bullish breakout on Bitcoin is looking very good. On coins like Ethereum, again, I would say at this point, Do we drop back down below 3,500 and go start going toward that daily smart trail? Or do we make a break above 4,000 and all of a sudden we're talking about massive targets to the upside pushing closer to $5,000? I do think Bitcoin and Ethereum, as much as I still am trading altcoins, we just had that video that went out yesterday about the top 10 altcoins I'm buying. The most important charts to be watching in this season are still Bitcoin and Ethereum. And then after that, I would say watch the Bitcoin dominance chart. And then after that, pick your favorite altcoin. But Bitcoin and Ethereum, the two most important charts to be watching to decide, is this still a strong, raging bull market, or are there some temporary tops coming in? So if you do your own charting, that's my advice to you. Watch Bitcoin and Ethereum, the most important charts at the moment. Let's get into some conversations here, starting off with the job market. I want to get Shrum's opinion on this, but two big stories coming out here even today. Number one, ADP non-farm payrolls, they beat their expectations. And people are going to say, oh, that's great news. Well, not necessarily. Shrum's going to explain why, but the actual number came out at 104,000, even though we were projected only to have 77,000. Previously, we had negative 33,000, right? So the last projection was, man, jobs are in real trouble. This one, we smashed expectation. We thought jobs would be added. We added even more. Why does that matter, Shrum? To paint the picture of what people should do with that information when it comes to their investments into riskier assets.
Yeah, well, ultimately, you should take no action. I took no action on this information. I am long stocks. I am long crypto. I am long Bitcoin. There is not an actionable takeaway from this. Why would I say that it's slightly bearish? Is because the Federal Reserve is now de-incentivized to cut rates as a result of the ADP data. Now, here's the reason why they probably won't have any influence about the ADP data on their decision making, and that's because it comes from the private sector, right? Maybe a future board of the FOMC will consider the private sector data, but they mostly look at PCE and other inflation indicators that come from the Bureau of Labor of Statistics because they love to have the worst data possible to make their decisions. But as people who are participating in the market and willing to take risk, buying Tesla, buying Bitcoin and other stocks, we have to look at all of the data. That's why ADP matters. It's not something to be discarded just because the Fed doesn't look at it. Another way to think about this too is that good news for the labor market, whether it comes from the Bureau of Labor Statistics, the government, or whether it comes from the private sector, good news for the labor market is bad news for risk assets in the current economic environment we are in. Okay, and that's because of the perverse incentives that are put into the market because the Federal Reserve exists. It would be better if the Federal Reserve did not exist, but that would be very complicated to unwind at this point in time. So, Tim, that's my take on the ADP headlines.
Yeah, absolutely. I think that's a great rundown right there. Continuing the good news for the economy, yet potentially, bad news for if you're rooting for rate cuts. GDP came out beating its expectation. Again, expecting 2.3% increase in GDP. It came out 3%, right? So on one hand, it's like, hey, I thought the tariffs were supposed to be ruining the country. The economy is doing quite well. But at the same time, with such high GDP, despite the high interest rates, what does this mean? I mean, it's kind of the same thing, what you kind of wrapped up there. High job numbers means not a lot of pressure to have to cut rates early. We can keep that until inflation is 2% on the dot. Same thing with GDP. Since the economy is not in trouble, do you see this as a good thing for markets overall because the economy is strong, or does this fall in that same boat with the job numbers of this continues to allow the Fed to feel comfortable keeping the rate hikes high?
Well, if Jerome Powell is the play it by the book that he says he is, and that his record does show that he is, then he does not consider GDP when making decisions, and neither should the rest of the board of the Federal Reserve. It's not in their charter to consider GDP. Their charter is clear. It is unemployment and inflation. Now, with that said, of course, they do look at GDP. They are aware of one of the biggest indicators in markets. And Tim, I think that this just really bodes well for President Donald Trump politically, because you can't have a recession if you have positive GDP. So it's a big win for President Donald Trump, obviously. And this will help him in the midterms later on, and help the Republicans in the midterms. When it comes to the market, I mean, this really shouldn't be too much of a surprise. We've seen excellent earnings so far this earnings season for stocks, and we have seen really good inflation data. The inflation has stayed low, and employment has been resilient and dynamic. that equals good GDP. Now, it is interesting also when you consider the Doge angle on this, because Doge should have cut a lot of spending in the government, and GDP does include government spending. So we won't try to break that down and unpack that here, but do understand that a large portion of GDP is government spending. Doge continuing to build momentum into the future could potentially bring down GDP in and of itself. So that's something to consider, but that could coincide with a reindustrialization theme that seems to be taking place under the Trump administration with the BBB, Big Beautiful Bill, and other efforts from the administration. So GDP going up does not equal recession.
Good stuff. Good stuff. I think that's a very interesting, Mark. I actually didn't know that for some reason, or maybe I did and I'd forgotten that the Fed doesn't look at GDP to make their numbers. I'm very curious. I'm very curious what they really, they tell us what they look at and they tell us what they don't look at, but sometimes that seems to change. And
well, let me just, them. It's not that they don't look at GDP. That would be impossible to enforce. It's that their mandate does not include to stimulate or destimulate GDP in the same way that they do inflation and unemployment.
Makes sense. Let's transition here. Good stuff there. Again, at the end of the day, if you're an American, hopefully a lot of you guys got new jobs if you didn't have a job, or kept your job. Hopefully no one has lost their job recently, and the economy is going strong, right? So I want to see my crypto portfolio go up. I want to see my investments go up, but I'm also glad to know that the economy is doing quite well. I want to see that continue. Something that could put a slight damper, although it's a little bit complex, the details here. Go to my screen. Another tariff announcement has come out, and people are going to kind of be on both sides of the fence with this one. Some people will say it doesn't matter. Some people will say it will. But ultimately, the United States just announced a 25% tariff on India starting on August 1st. By the way, that's in 2 days from now. And ultimately, the details that come out here, and tell me if I'm wrong, Shrum, you go off the screen now. In reality, this is actually kind of a negotiation tactic to go against Russia. Because India at the moment, even though we have a good relationship with India, that was actually some big news a couple months ago when we struck a trade deal with India. This is going to help us to not have so much pressure on the China trade deal. But from what I'm understanding, and I want you to kind of go deeper on this, India right now buys all their weapons and energy, or at least the majority of their energy, from Russia. This is obviously funding Russia and allowing them to stay in the war with Ukraine a little bit longer. Obviously, Donald Trump is trying to bring some peace. The Americans are trying to bring peace in that land, but Putin's kind of not taking phone calls, or he's not talking about what Trump wants to hear when those phone calls happen. So as much as this is punishing India, it really, to me, seems like more of a punishment to Russia, because what he's telling India is, hey, stop doing deals with Russia. Stop paying them for oil. Stop paying them for weapons. Buy that from us instead. We'll take this away. Trump told the American people this really won't affect American people that much, because we really don't get a lot of stuff from India at this moment in time. So we stay with the current process. We should be good. What were your takes on this piece of information? Is this bullish? Is it bearish? Is it a nothing burger? Am I getting it right about how this seems to be more of an attack, maybe enforcement against Russia more so than India, or how did you read this situation?
Yeah, I think you laid it out pretty well. I think Vladimir Putin has not been playing ball, and President Donald Trump, promised his constituency, conservatives in America, that he would end the war with Ukraine on day one. That has not happened, right? Has had a lot more success with the Israel-Gaza conflict. However, there is still an ongoing hot war, right? Essentially going through Ukraine and Russia. So it doesn't look good. It's not a promise that he was able to keep. So he has this new tool that many presidents before him have not figured out how to use effectively, and that is tariffs. Donald Trump, think what you want about him, he has been able to pull a rabbit out of the hat and actually has a real chance at balancing the American budget, getting that deficit cleared out and going towards positive surplus that hasn't been done since Bill Clinton on an annualized basis. He's absolutely putting pressure on Russia via India. And I do think there's a bit of coordination. India is probably not going to be surprised that they're kind of having to take some punishment here. We have a very close, well, I shouldn't say we do. Donald Trump and Narendra Modi, the president there in India, have a very good relationship. And so they've actually campaigned together. in both countries to gain the seat that they're currently in, respectively. So I think that they're kind of working, but at the same time, India is actually purchasing, a lot of energy and a lot of weapons from Russia. So that's not a good thing. So it's a complicated dynamic. A lot of Americans voted for Donald Trump to sort out complicated dynamics exactly such as this. Stock market's putting all-time highs. That could not be the case. Donald Trump is doing a good job sorting all this out, and the market is clearly rewarding him for that.
Yeah. It's going to be interesting to see how this one plays out. Because again, like you said, Donald Trump and the president of India, they have a good relationship. Again, I just did not see this as an actual punishment on India. I think he's going to get what he wants as well. I think he kind of knows he's going to get what he wants with India at the end of the day. And by the way, again, let's just take all the politics out of it and business stuff. If we get India working to buy weapons from the United States, and we get India to start buying and funding their oil, everything through the United States rather than Russia, you're just talking about the economics here in the United States. We just saw that GDP number shoot up. That could go even higher. India is not a small country with just a handful of people. I think it's the second most populated country in the world. You have to fact check me on that one. Maybe I know China's right up there, and Indonesia is going to be up there as well. But India's either 2 or 3, I believe, in terms of population. So I think it's big stuff there. Is number 1? Did it took over number 1? Again, I don't have those numbers on top of my head.
Yeah, I think it overtook China in 2024. But one thing to consider though is the reason why India is buying energy from Russia is because Russia can't sell it to many other people, right? There's sanctions on all countries that care what America has to say, and so India is able to get that Russian oil for a lot cheaper, and so is China, right? So there's a bit of the incentives are clear. And so in order for India to purchase their energy elsewhere, they're going to have to pay more for it. Is that something they're willing to do? Maybe America can make the incentive to make that change apparent. And you can use a carrot or you can use a stick to accomplish a more aligned incentive. But this could be, so the other thing too is that we're also coming off some really, really big wins with the EU trade deal. That was a huge that trade deal could potentially go down as Donald Trump's crowning achievement as a president, full stop. That it was that big. It hasn't really set in quite yet how big that was, but that was a gigantic win, and momentum is very positive with the trade partners in China as well, as Scott Bessent, the Treasury Secretary, has made clear yesterday on Bloomberg, I believe it was. So there's wins just getting chalked up and chalked up and chalked up. This kind of a setback, it seems, you could say, or a bargaining tool, a bit of leverage with India to try to get through to Vladimir Putin. I think it's a dynamic and complicated situation. Again, America voted for Donald Trump because he thrives in these types of situations.
Absolutely. We have one more story here. I did want to show some breaking news at the moment. Go to my screen here, Smay. According to Watcher.guru, again, we have not, because we've been live with you guys, have not posted this back on here. President Trump, 8 minutes ago, according to Watcher.guru, announces that he heard Fed Chair Powell will cut interest rates in September. All right. So that's going to be very interesting to watch to see if Jerome Powell echoes that, or is this just another Trump just says things about Jerome Powell? I mean, I don't know. At what point does Jerome Powell break character and say, keep my name out of your mouth? Maybe uses some colorful language like Will Smith as well. Some other things here. I guess we should have brought this up earlier. Bessent predicting earlier today that Federal Reserve was not going to cut rates. Again, no one should have been surprised at all. But there is some other big news happening right now in the world of cryptocurrency when it comes to our institutions. Right, we've been saying for a long time, this is the bull market of institutional adoption. Name a larger institution, name a larger banking platform that has been more anti-crypto than JP Morgan. I'm sure there could be one out there. I don't know if I'm saying it. It's going to be hard to find one though, right? A $4 trillion asset manager who has a CEO who has called Bitcoin holders morons, idiots. He's talking about how it's going to zero. Well, maybe he's become an idiot or a moron like the rest of us because he's the CEO of his company, which means decisions like this do not happen without his approval. JP Morgan partnering with Coinbase to, quote, make buying crypto easier than ever. Is he just going to make money off of us morons and idiots who are buying cryptocurrency? Or does he understand that this is the future? Shrum, what is your take right here on Jamie Dimon, who's never once publicly said something nice about Bitcoin, leading his company in this direction? What are your thoughts?
Yeah, I think Jamie Dimon represents an old guard in Wall Street that still has a decent amount of power, but know that they're on the way out. And so, they continue to speak to one group of rich people, while the managers that are actually running the company, that is, and the banks, whether it be Vanguard, whether it be BlackRock, whether it be Fidelity, whether it be, in this case, J.P. Morgan, they're it's younger folks. It's the sergeants that are down actually running things and making things happen. And of course, if you're not making deals with Coinbase, then you're not investing in the future of finance. You're not investing in the future of money. And there's too much on the table to just walk away from by not partnering with an operator like Brian Armstrong over at Coinbase and bringing financial services to the next billion people that are looking for those types of financial services or are yet to be born. JP Morgan has been through thick and thin. They've been through all kinds, the Great Depression. They've been through recessions. They know what needs to be done. Jamie Dimon, who has led the company kind of to be anti-crypto, he's part of an old guard, and he's probably not going to step down as CEO. He's probably not going to resign as CEO because his name carries a lot of weight with people who are going to make decisions that otherwise would not make those decisions in the favor of JP Morgan. So I think it's a very big deal. There was also another announcement. JP Morgan took over the relationship with Apple computers to manage their and bring financial services to Apple users. They took that from Goldman Sachs. I believe that announcement was either today or yesterday. So JP Morgan racking up some very, very big wins with technology companies and with financial technology companies like Coinbase and Apple. So, buy the stock. It's a good stock, not financial advice, obviously. But I do think that JP Morgan is a company that I've been trying to keep people from helping people avoid because they have been so slow to invest in crypto and so anti-vocal and vocal about their position against crypto. Now that they're willing to partner with Coinbase much more publicly, even though they've been definitely investing in crypto, that's obvious. They have their own blockchain that is associated with AVAX. This is a moment. This is a turning point where folks who have crypto as a thesis, they understand crypto as a financial future. Now that this gives them a little bit more of a leeway to go ahead and buy stock in JP Morgan. It also comes a day after SoFi Bank went up 15% their stock, right? And SoFi is really, really well positioned to thrive in the crypto space. So JP Morgan, they've got to throw their weight around. They've got to look better than SoFi, the up and coming fintechs. And this is the way to do it. Partner with Apple, partner with Coinbase.
Shrum, you said one thing that I actually disagree with you on. And you said, we've been waiting and telling people that, JP Morgan you'll be wary of the fact they haven't bought crypto yet. I disagree with you. I think they've been buying crypto this whole stinking time. I think that JP Morgan and Jamie Dimon have been buying Bitcoin at least for multiple years. And one of my biggest reasons why is because I've made this joke in the past, and I don't think the joke is going to necessarily offend anybody, hopefully here, but it's that I think that when they go to hire a new CEO at JP Morgan, they ask, are you willing to lie to the people about what moves we're making as a company? And if the person being interviewed says, no, I'm not going to lie, then they don't get the job. You have to lie to work for JP Morgan. I don't know the numbers off the top of my head here. Again, I didn't know where we're going to go with this conversation, but go back and look at the ridiculous number of fines that JP Morgan has paid over the years in fraud situations, or not fraud, but misleading their users. They are famous for telling their users to buy an asset while secretly they are dumping that asset, and vice versa. They are famous for telling people to dump and stay away from an asset that they are buying up the stock. Jamie Dimon has been very adamant that people should not be buying Bitcoin. In fact, there was one point where he even said that any person working for JP Morgan buying Bitcoin would be fired. Seems really ludicrous, right? Well, it's just him being very vocal to his members and to his customers, don't buy Bitcoin. history would suggest that means he was behind the curtains buying. In fact, we've heard from people who we're not going to name sources that people who work pretty high up in JP Morgan have said Jamie Dimon's actually pretty pro Bitcoin and has been so for a while. So if you're wondering, do you ever listen to anything Jamie Dimon says? You just trade it the exact opposite. If he's bullish, stay away. If he's bearish, go ahead and all in. And so him not making any public comment here, I think is the great news. But again, if you're thinking Jamie Dimon's still anti-crypto, anti-Bitcoin, companies don't have a track record of making massive deals without the CEO's not only acknowledgement, but also his approval. So that's all you need to know. Watch what they do, not what they say. Breaking news here more recently, and I'm sure this is going to come up in the press conference. We're going to start turning our attention back. We have 4 minutes here until the FOMC meeting. It's funny that this is where I'm seeing this breaking news. I saw someone put it in chat, but LuxAlgo's X account, we love LuxAlgo, which, speaking of, go to my screen. I got to read this news and tell you about LuxAlgo. You guys see us use it on the charts all the time, but they're breaking this news. Bowman and Waller both dissented against this action, advocating for a 25-point rate cut. Why is this significant? Because every FOMC meeting so far, Jerome Powell has been able to say the decision was unanimous. The decision was unanimous. The decision was unanimous, meaning everyone agrees on this decision. What will he say in the press conference this time? Will he admit, yeah, actually, we do have a couple of members thinking we should have cut this time, which makes us believe September is going to be a cut? Either way, this is going to be a very interesting topic and another reason to be bullish. Speaking of LuxAlgo, this is a massive thing you need to know about. Take my face off here really quickly. If you watch this channel and you love the technical analysis that we do, and you're saying, man, I want to get that LuxAlgo project just like Tim, but you've been holding off. Right now, if you act with LuxAlgo and our link down below, you can get up to 50% off. I highly recommend getting the ultimate package. Spend the extra $4 a month by the whole year for $30 per month. And we're talking about a package that's usually $719. It's right now $360 when you buy the whole year. Just show you the crossover. If you buy it month to month, you're spending almost $100 a month. Go act on this right now. There is only 5 days left to act on LuxAlgo right now. What's even better, go off my screen here. When you buy that ultimate package, not only are you getting AI backtesting, you also get the Broz liquidation chart. We haven't changed the brand name of that one. If you ever see us use liquidations on TradingView, that's not something that TradingView just has up there. We worked with LuxAlgo to build that, and only our members get access to that indicator. That's something you can get when you sign up for LuxAlgo Ultimate. If you need to upgrade, if you have a month-to-month and you want to upgrade, I'm just trying to save you guys money, right? That's at the end of the day, this is what I'm trying to do. If you don't buy LuxAlgo, that's okay. They are the #1 trading tool in the world. I use them each and every single day. I trade hundreds of our VIP traders each and every single day how to make money. And one of the largest ways to do it is by using the LuxAlgo tools. Go sign up with that link down below. 2 minutes until we get into this FOMC meeting. Shrum, come up on screen here. Let's split the screen. Hot takes, hot predictions from you on what Jerome Powell will say, will not say. What are you looking to expect here?
Yeah, I'm reading this dissent because I remember hearing that Bowman was going to dissent. I think Waller dissenting and joining that dissent was actually a last minute decision that the media did not know about. Could potentially not even be priced in. I don't know that it's going to be that significant, but this is a really big deal. Jerome Powell, man, I don't know of too many people who are under more pressure than he is. In this press conference, all eyes are on this man more than usual because of how much pressure Donald Trump and his administration has been putting on him. It's really interesting. You hear a lot of podcasts, a lot of important people talking about the Fed's independence. Right, the Fed's independence is under question. I think the Fed independence is way over. It's way over. I mean, when Jerome Powell and the Federal Reserve, when they cut rates in September of 2024, right before an election, a jumbo rate that they really couldn't explain, and then cut 2 more times that year, I think that is when the nail was driven into the coffin of Fed independence. The question is, what comes next? The answer is Bitcoin. Bitcoin is the answer. We do not need a Federal Reserve. We don't need central banks anymore. They got us this far. They've been okay. They get maybe a C+ in my book, but we don't need them anymore. They're old tech. Throw them out. But here we're gonna spend the rest of this stream listening to the leader of the biggest central bank because they are still relevant, like Jamie Dimon.
There we go. Well, we're about to transition over there. Smay, I do believe they are probably going to be walking out here any minute. There's the podium right there. Still nothing going on here. Let me set this up. I have it fixed today. We're going to be watching both Bitcoin and ETH. So if you guys are tuning in right now, here he comes. ETH on the top, Bitcoin on the bottom. Let's listen in.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a 1.2% pace in the first half of this year, down from 2.5% last year. Although the increase in the second quarter was stronger at 3%, focusing on the first half of the year helps smooth through the volatility in the quarterly figures related to the unusual swings in net exports. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles picked up from last year's pace. Activity in the housing sector remains weak. In the labor market, conditions have remained solid. Payroll job gains averaged 150,000 per month over the past 3 months. The unemployment rate at 4.1% remains low and has stayed in a narrow range over the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance and consistent with maximum employment. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in June, and that, excluding the volatile food and energy categories, core PCE prices rose 2.7%. These readings are little changed from the beginning of the year, although the underlying composition of price changes has shifted. Services inflation has continued to ease, while increased tariffs are pushing up prices in some categories of goods. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market-based and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%, and to continue reducing the size of our balance sheet. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to show through more clearly to prices of some goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation could be short-lived, reflecting a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. For the time being, we're well positioned to learn more about the likely course of the economy and the evolving balance of risks before adjusting our policy stance. We see our current policy stance as appropriate to guard against inflation risks. We're also attentive to risks on the employment side of our mandate. In coming months, we will receive a good amount of data that will help inform our assessment of the balance of risks and the appropriate setting of the federal funds rate. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on potential revisions to our statement on longer-run goals and monetary policy strategy, and are on track to wrap up any modifications by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thanks, Chair Powell. There's a lot of lean in the markets, and not to mention out of the administration for a rate cut now in September. Is that expectation unrealistic at this point?
So, as you know, today we decided to leave our policy rate where it's been, where I would characterize as modestly restrictive. Inflation is running a bit above 2%, as I mentioned, even excluding tariff effects. The labor market's solid, historically low unemployment. Financial conditions are accommodative, and the economy is not performing as though restrictive policy were holding it back inappropriately. So it seems to me and to almost the whole committee that the economy is not performing as though restrictive policy is holding it back inappropriately, and modestly restrictive policy seems appropriate. All that said, there's also downside risk to the labor market. In coming months, we'll receive a good amount of data that will help inform our assessment of the balance of risks and the appropriate setting of the federal funds rate.
So just to follow up, by coming months, does that include the possibility you'll be getting essentially 2 rounds of jobs and inflation data between now and the September meeting? Is that potentially adequate to make a decision to lower rates at that point?
So you're right. We do have, this is an intermeeting period when we'll get 2 full rounds of employment and inflation data before the time of the September meeting. We have made no decisions about September. We don't do that in advance. We'll be taking that information into consideration and all the other information we get as we make our decision at the September meeting.
Steve.
Thank you, Mr. Chairman. You took out the word or the notion that uncertainty has diminished from this statement. Does that mean uncertainty has increased? And I'm just wondering, the administration has struck several deals with large trading partners where it seems like we now know what the rate is going to be. Does knowing that rate add to your certainty to change policy, or do you need to wait to see the economic effects?
So essentially, the statement in our statement about uncertainty reflects what's gone on since the last meeting. So at the time of the last meeting, uncertainty had moved down a little bit, but it was more or less even this time. So we took out, had diminished because it didn't diminish further. So there's not really much in that. And then your second question is, say again?
There have been several deals that have been struck, and now we seem to have an idea of what the tariff rates are going to be with some of our large trading partners. Does that not add to the kind of certainty you might need, or is it you're waiting for the economic effects to show themselves?
No, I think we're still, you're right, it's been a very dynamic time for these trade negotiations, and lots and lots of events in the intermeeting period, but we're still a ways away from seeing where things settle down. We are clearly getting more and more information, and I think at this point, people's estimates, our estimates, outside estimates of the likely, effective level of tariffs is not moving around that much at this point. But at the same time, there are many uncertainties left to resolve. So yes, we are learning more and more. It doesn't feel like we're very close to the end of that process, and that's not for us to judge. But it feels like there's much more to come, as well, looking ahead.
Neil.
Hi, Mr. Chairman. Neil Irwin with Axios. This morning we got a GDP report in which final domestic private purchases decelerated, slowest pace since 22. There was a weakness in the interest-sensitive sectors and residential investment, commercial structures. Are those not signs that monetary policy is a little too restrictive right now, given current economic conditions?
So the GDP and PDFP numbers came in pretty much right where we expected them to come in. You got to look at the whole picture. So certainly, as I mentioned in my opening remarks, economic activity data, GDP, private domestic final purchases, which we think is a narrower but better signal for future, for where the economy is going, has come down to a little better than 1%, 1.2%, I think, in the case of GDP for the first half, whereas it was 2.5% last year. So that has certainly come down. But if you look at the labor market, what you see is, by many, many statistics, the labor market is kind of still in balance. It's things like quits, job openings, and let alone the unemployment rate. They're all by many measures, very similar to where they were a year ago. So you do not see weakening in the labor market. You do see a slowing in job creation, but also a slowing in the supply of workers. So you've got a labor market that's in balance, albeit partially because both demand and supply for workers is coming down at the same pace, and that's why the unemployment rate has remained roughly stable, which is why I said we do see downside risk in the labor market. I mean, our two mandate variables, right, are inflation and maximum employment, stable prices and maximum employment, not so much growth. So the labor market looks solid. Inflation is above target, and even if you look through the tariff effects, we think it's still a bit above target, and that's why our stance is where it is. But as I mentioned, downside risks to the labor market are certainly apparent.
So on labor, given the fluid labor supply situation, is there a number for this jobs report we get on Friday that would look to you like equilibrium job growth?
The main number you have to look at now is the unemployment rate, because it's true that the demand for workers in the form of, let's call it, just say payroll jobs, that number has come down, but so has the break-even number, kind of in tandem. So, as long as that puts the labor market in balance, the fact that it's getting into balance due to declines in both supply and demand, though, I think it is suggestive of downside risk. So we of course, will be watching that carefully.
Thank you. Colby Smith with the New York Times. Two of your colleagues called for a quarter-point cut today, and I'm wondering what aspects of their argument were most compelling to you, and how you're weighing their views against those on the committee who, as of the June forecast, were in the camp of the Fed holding interest rates steady for the remainder of the year. And just in terms of the June SEP in particular, is that still the best representation of where the core of the committee is?
So on the dissents, what you want from everybody, and also from a dissenter, is a clear explanation of what your thinking is and what are the arguments you're making, and we had that today. So I think basically this was quite a good meeting all around the table, where people were thought carefully about this and put their positions out there. As I mentioned, the sort of the majority of the committee was of the view that inflation's a bit above target, maximum employment is at target. That calls for modestly restrictive, in my way of thinking, modestly restrictive stance of policy for now. But we had two dissenters who, I think, you want that clear thinking and expression of your thinking, and we certainly had that today, I think, all around the table. In terms of, you asked about the June SEP, I wouldn't. You're right. That's what it says, and that may well. I couldn't point to it 6 weeks later as expressing people's thought. You really can't do that. We don't run an SEP, and I don't like to substitute in my own estimate of what the SEP might be. We don't have one, so I'll just say that we haven't made any decisions about September, monitoring all the incoming data and asking ourselves whether the federal funds rate is in the right place.
And just on the point about policy being only modestly restrictive, does that mean that there's actually not much scope to reduce rates once the conditions for a cut are met, barring a significant weakening of the labor market?
So let me say, my own estimate is modestly restrictive, and there are a range of views of what the neutral rate is at this moment for our economy, and so others may say it's more restrictive or less restrictive even. We're going to be at some point, when we return to moving toward a more neutral stance, we'll be making that judgment as we go. I don't think we have a preset course. It's not so mechanical as saying, you know, we've derived with great confidence the neutral rate and that is our destination, because really we understand that no one actually knows what the neutral rate is. We know it by its works, and that will be how the way the economy reacts over time to, you know, to slightly looser policy.
Nick Timmeros, The Wall Street Journal. Chair Powell, my question is about what have you learned over the last few months about the inflation generating and price pass-through process? And just to drill down, the June CPI report showed evidence of tariff-induced goods inflation. Now, the tariff landscape is only starting to be settled with some of these more recent deals. Given the lags between when tariffs are announced and when they show up in goods prices, is 2 months a long enough horizon to evaluate the impact and be confident that tariffs aren't impacting the broader inflation process?
I think you have to think of this as still quite early days. And so I think what we're seeing now is substantial amounts of tariff revenue being collected on the order of $30 billion a month, which is, you know, substantially higher than before. And the evidence seems to be mostly not paid only to a small extent through exporters lowering their price, and companies or retailers, sort of people who are upstream, institutions that are upstream from the consumer, are paying most of this for now. Consumers it's starting to show up in consumer prices, as you know, in the June report. We expect to see more of that. And we know from surveys that companies feel that they have every intention of putting this through to the consumer, but, you know, the truth is they may not be able to in many cases. So I think we're just going to have to watch and learn empirically how much of this and over what period of time. I think we've learned that the process will probably be slower than expected at the beginning, but we never expected it to be fast. We think we have a long way to go to really understand exactly how it will be. So that's how we're thinking of it right now.
So if I could follow up, is the reticence to look through core goods inflation being driven by the judgment that during the pandemic expectations proved more adaptive than anyone at the Fed expected? Is it being driven by uncertainty over how restrictive policy is?
You could argue we are a bit looking through goods inflation by not raising rates. You know, we haven't reacted to new inflation, but I mean, I wouldn't insist upon that. But I don't think, I think the base case, as I said, a reasonable base case is that these are one-time price effects. Of course, in the end, there will not be. This will not turn out to be inflation, because we'll make sure that it's not. We will, through our tools, make sure that this does not move from being a one-time price increase to serious inflation. We want to do that efficiently, though, and that means we want to do it. If you move too soon, you wind up maybe not getting inflation all the way fixed, and you have to come back. That's inefficient. If you move too late, you might do unnecessary damage to the labor market. So there won't be, in the end, a big inflationary problem. What we're trying to do is accomplish that in a way that is efficient. But in the end, there should be no doubt that we will do what we need to do to keep inflation under control. Ideally, we do it efficiently.
Michael McKee from Bloomberg Television and Radio. The one big bill, leaving aside the adjectives, do you expect it to add stimulus to the economy in 2026? And would that be an argument for remaining on hold or cutting back on the number of rate cuts you would expect for next year?
So, of course, let me just ritual disclaimer that we don't express any judgments or anything like that on fiscal legislation or other legislation for that matter. But I would say, when you think that, you know, the biggest part of the bill was making permanent existing law on taxes, I don't think we see it as particularly stimulative. There should be some stimulative effect, but it shouldn't be significant over the next couple of years.
And to follow up, what do you, well, I don't want to put this in terms of you and the president, so let me ask it this way. Do you have concerns about the cost of keeping rates elevated for longer in terms of interest rate charges?
Yeah, no, that's, we have a mandate, and that's maximum employment and price stability. And it is, it's not something we do to consider the cost to the government of our rate changes. We have to be able to look at the goal variables Congress has given us, use the tools they've given us to achieve those goals, and that's what we do. We don't consider the fiscal needs of the federal government. No advanced economy central bank does that, and it wouldn't be good for, if we did do that, it would be good neither for our credibility nor for the credibility of U.S. fiscal policy. So it's just not something we take into consideration.
Victoria.
Hi, Victoria Guida with Politico. When it comes to the renovations of the Federal Reserve's headquarters that the administration has been looking into, do you see their interest in that issue as being directly tied to the president's push to get you to lower interest rates?
Not for me to say. I will say we had a nice visit with the president. It was an honor to host him. It's not something that happens very often at the Federal Reserve to have the president come over, let alone to visit a building. But it was a good visit.
Are there any aspects of the project that they've raised that you see as making you reconsider any aspects of the project?
So, this project was hatched and conceived almost a decade ago now, and we went through the very long process of clearing it through historic preservation at the National Capital Planning Commission, and a lot of back and forth there. It was very constructive. We started out to do the work, and we're very well along on that work, and I was quite pleased to have the president say multiple times that what he really wanted to see was us getting this construction completed as soon as possible. That is our focus, and that's what we're going to do.
Thanks, Mr. Chairman. Andrew Ackerman with the Washington Post. What message do you take from the fact that inflation hit 2.1% last September and has bounced higher since? Why do you think financial conditions are restrictive and a neutral rate's below 4% when inflation has stopped falling for almost a year?
So inflation, when you talk about these 12-month inflation measures, you're always battling residual seasonality. So we'll have, for example, 2 months of high inflation, sometimes early in the year, and then inflation turns lower, and a lot of that may just be an artifact. So that's why we look at the 12-month numbers. I think inflation is most of the way back to 2%. There are things like the catch-up inflation. So, for example, all the insurance costs that they're only now going through inflation, but they actually reflect inflationary pressures from 2-3 years ago. So that's got to go through. In addition, now we have 3 or 4 tenths of inflation in core inflation from tariffs. So, and we can't really separate that out. We're not going to have a separate kind of inflation that isn't the tariffs. We're always going to be dealing with all of inflation. But the composition, as I mentioned, has really changed. And if you go back to the last couple of years, it was all about services inflation, which was being very sticky. Now services inflation is coming down nicely. Goods inflation was well behaved before, and now goods inflation is going up. So the story has really changed. That's partially because of tariffs. It's also partially because we had restrictive policy in place, and we've seen that the result of that gradually work its way through the services economy.
Okay, the other thing I wanted to ask is, are you comfortable that BLS can continue performing their mission effectively if they take an 8% reduction in headcount and authorized spending as the administration has proposed?
I'm not going to comment on the administration's proposal. I do think, as I've said, I think that we're getting the data that we need to do our jobs, and I think it's really important that good data helps not just the Fed, it helps the government, but it also helps the private sector. People in the economy, they use this data a lot too, so it's quite important for our economy and certainly for the Fed's work and other government agencies' work that we continue to get better at data. That's what we've been doing for 100 years. We've been getting better and better and better. It's very hard to accurately capture in real time the output of a $20+ trillion economy. And the United States has been a leader in that for 100 years, and we really need to continue that, in my view.
Edward. Thank you, Mr. Chairman. Edward Lawrence from Fox Business. How concerned are you with the data that we're coming in, showing no significant upward trend in inflation over the past 6 months, that the wait-and-see approach for inflation is actually giving companies cover to raise prices?
How concerned am I that say that again?
The wait-and-see approach is giving...
The wait-and-see approach, what do you mean by that?
For cutting rates. You're waiting to see if the tariffs will affect inflation. So it's a wait-and-see approach.
Well, so that, that's where policy's restrictive. When we start cutting, it'll go toward neutral.
Okay. This delay, though, where you're saying there's a one-time price increase for tariffs, which possibly could lead into bigger inflation or more inflation. Is that giving companies cover, though, to raise prices?
Well, what may be giving, it's not our policy stance, what may be giving, some companies will certainly be taking advantage of the fact of the tariffs and all of the discussion of how they're going to, companies will raise prices when and as they can. And you saw it famously in the first administration of President Trump during those tariffs. Washing machines were tariffed, but dryers weren't. But what do you know? The price of dryers went up too, just like washing machines. So companies will often just they'll cross the street in a group, if you know what I mean. That'll happen. We don't see a lot of that. I mean, what we see now is basically the very beginnings of whatever the effects turn out to be on goods inflation. And I'll say again, they may be less than people estimate or more than people estimate. They're not going to be zero. Consumers will pay some of this. Businesses will pay some of this. Retailers will pay some of this. But we're just going to have to see it through.
And just to follow, if I could, some additional tariffs have been in place since February, and things really haven't broken yet with the economy. So how do you justify to somebody who's looking for a house, who's facing a 7% mortgage and maybe can't afford those rates? How do you justify that?
Well, so the housing is a special case, right? We don't set mortgage rates at the Fed, right? We set an overnight rate, and the rates that go into mortgages are longer term rates, like Treasury rates. It might be 30-year rates, it might be shorter than that, but it's not the overnight Fed's rate. It's not that we don't have any effect. We do have an effect, but we're not the main effect. There are other things though going on in the housing sector, and one of those is just there's kind of a long-term housing shortage that we have. We haven't built enough housing. This is not something the Fed can help with, but then that'll be the case even after things normalize. So I think the best thing that we can do for housing is to have 2% inflation and maximum employment, and that's what we can contribute to housing. There are lots of other jobs to do for the private sector and Congress, but that's what we're trying to get to. I mean, we've made a lot of progress toward that. We have a very good labor market right now. Inflation, we were very close to 2%. We're seeing some goods inflation move us away, but so far not very far away.
Chris.
Hi, Chair Powell. Thank you. Well, can you give us a little more about what kind of economic data does the Fed need to see before you'll be ready to cut? I mean, do you need inflation back nearly to target? Are there other things in the pricing that you look for? Do you need to see weakening in the job market? What kind of things are you looking for?
I mean, ultimately, it could be any of those things, right? But if you saw that the risks to the two goals were moving into balance, if they were fully in balance, that would imply that you should move toward a more neutral stance of policy. This is the special situation we're in, which is we have two-sided risk to both of our goals. When we paused, inflation was above target and the labor market was pretty good. So that was a time when policy was restrictive when we paused. And to be restrictive is to be supporting a return to our inflation target, right? So as the two targets get back into balance, you would think you'd move in a way closer to neutral, and that the next steps that we take are likely to be in that direction. What will it take? It'll be the totality of the evidence. As I mentioned, there's quite a lot of data coming in, which before the next meeting, will it be dispositive of that? It's really hard to say. We don't make those decisions right now, so we'll have to see.
Well, I guess just in terms of inflation, though, for example, like will some people would point to if it remains only in goods and it doesn't bleed over to services, then maybe that's evidence that the tariff effect is going to be a temporary one-time thing. Is that kind of thing affect your thinking, or do you just need to see the number come down
I think
closer to 2?
We'll look at everything. It's, as I mentioned, a pretty reasonable base case is that this will be a one-time price increase. And in the end, we'll make sure that that's the case. We're just trying to do that efficiently. And efficiently means getting the timing right so we don't, again, if we cut rates too soon, maybe we didn't finish the job with inflation. History is dotted with examples of that. If you cut too late, then maybe you're doing unnecessary damage to the labor market. So we're trying to get that timing right, and that's effectively what we're doing.
Claire. Claire Jones, Financial Times. Just a question on the dollar. We've seen it decline quite heavily this year. I was wondering if there's been any discussion about that at the meetings and to what degree that might be complicating your attempts to get inflation back to target. Thank you.
So this goes back to the division of labor between the Fed and the Treasury, as you, I'm sure, know. And the Treasury only speaks to the dollar. It's not something that's been a topic of major discussion at all at the Fed. I won't say it doesn't come up. If the transcripts, when they come out in a few years, they'll probably reflect some mentions of the dollar, but it would never be a major focus.
And just to follow on, if I may, to Andrew's question, I think the amount of imputed data in CPI now is up to 35%. I mean, is there any discussion of that as well? Is there any consideration of looking at alternative measures, data scraping and so on, in order to just ensure you've got a good read on what's happening to prices in the U.S. economy? Thank you.
We're monitoring the situation. We do, of course, I mean, as you know, during the pandemic, we looked at a whole lot of new kinds of data. People are looking at big data sets that you can get from all sorts of places, and we do all of that. But at the same, we really need the government data. Really is the gold standard in data, and we need it to be, to be good and be able to rely on it. And we're not going to be able to substitute for that. But if we what we need.
Jay O'Brien.
Hi, Mr. Chairman. Jay O'Brien, ABC News. President Trump has obviously invoked your name a lot. He has personally pressured you. Are you concerned the way that conduct might impact the Fed's independence going forward?
I'll just say that, I think that having an independent central bank has been an institutional arrangement that has served the public well. And as long as it serves the public well, it should continue and be respected. If it didn't serve the public well, then it wouldn't be something that we should just automatically defend. But what it gives us and other central banks, what it gives you is the ability to make these very challenging decisions that in ways that are focused on the data and the evolving outlook, the balance of risks and all the things we talk about, and not political factors. And so governments all over the advanced economy world have chosen to put a little bit of distance between direct political control of those decisions and the decision makers. So if you were not to have that, there would be a great temptation, of course, to use interest rates to affect elections, for example. And that's something that we don't want to do. So I think that's pretty widely understood. Certainly it is in Congress. And I think it's very important. I'll just say that.
Maria Eloisa.
Afternoon, Sir Powell. Maria Luisa Capurro from Bloomberg News. You mentioned a slowdown in consumer spending, and I wanted to see if you could walk us through what was the discussion with the committee around that. We've seen delinquency rates rising for upper-income households. How do you see that evolving in the next few months, and how much of a vulnerability that is for the economy going forward?
Consumer spending had been very, very strong for the last couple of years, and had repeatedly, forecasters, not just us, had been forecasting it would slow down, and now maybe it finally has. So I would say, if you talk to credit card companies, for example, they will tell you that the consumer's in solid shape and that spending is at a healthy level. It's not growing rapidly, but it's at a healthy level, and delinquencies are not a problem. You mentioned high-end delinquencies. I don't know what to make of that. I read the same thing, but so generally, if you look at the banks, and when the banks talk about in their earnings calls, the performance of credit has been good. So essentially, you have a consumer that's in good shape and is spending, not at a rapid rate, but it's true, and it was, again, right in line with what we expected, the GDP data that we got this week. And I think it's still a little bit difficult to interpret because you have these massive swings in net exports, which may also be affecting, some of that can affect consumer spending as well. Look, it's one of the data points that we pay most careful attention to, and there's no question that it's slowed. And we're watching it closely, but we also watch the labor market and the performance of inflation. Those are our two variables that we're assigned to maximize.
And just to follow up on what my colleagues were asking about the dissents, Governor Waller said that the labor market is on edge, and he was pointing to weaknesses on the private sector. I was wondering, you've said that the main number to look at is the unemployment number overall, but what was the discussion about the state of the private jobs market?
So I'm not going to talk about any individual's, any individual's comments. I wouldn't do that. But I think what we know is that private sector job creation, certainly in the last report we'll see on Friday, but had come down a bit. And if you take the QCEW adjustment seriously, it may be even low, maybe close to zero. But the unemployment rate was still low. So what that's telling you is that demand for workers is slowing, but so is the supply. So it's in balance, oddly enough. You've got a very low unemployment rate, and it's kind of been there for a year as job creation has moved down. But also we know that because of immigration policy, really, the flow into our labor force is just a great deal slower, and those two things have slowed more or less in tandem. If you look at things like I mentioned, quits, look at wages. Wages are gradually cooling. Look at vacancies to unemployment. Those things have been pretty stable they haven't really moved a lot in a full year. So I think if you take the totality of the labor market data, you've got a solid labor market. But I think you have to see that there are downside risks. You don't see weakening in the labor market, but I think you've got downside risks in a world where unemployment's being held down because both demand and supply are declining. I think it's worth paying close attention to it, and we are.
Nancy.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. One more question on the lack of unanimity in today's decision, the two dissents. Was there talk during the meeting? I know you're not going to talk about exactly what individuals said, but in general, was there talk during the meeting of cutting rates, and what was the case against that at the meeting?
Sure. So we have an economic go-around where people talk about the economy, and then that's yesterday, and then today we have a monetary policy go-around all the way around the table. Everyone gives their views. So the discussion around policy was. The majority view was still what it has been, which is that inflation's running above target, maximum employment is right at target. That means policy should be a little bit restrictive, somewhat restrictive, because we want inflation to move all the way back to its target. So that's where people have been and still are. Two of our members felt that the time had come to cut, and that they, for the reasons that they're going to express. I won't tell you the reasons. They'll issue some kind of a thing in the next day or so. But that's the story, and I would say, well argued, very thoughtfully argued all around the table, good arguments, and it's a situation where unusual situation. The economy is in good shape, but it's an unusual situation where you have risks to both your employment mandate and your inflation mandate. That's the nature of a supply shock. And it's probably not surprising that there would be differences and different perspectives on that, as well as different views of where the neutral rate is, so that different views of how tight policy is. So we have those. I will say what you hope is that people, explain their positions very thoughtfully and clearly, and we absolutely had that today, all the way around the table. I would call it one of the better meetings I can recall from that standpoint.
And you've said you're waiting to be confident inflation is heading toward your 2% target before you start cutting rates. When you do get that confidence, would you be in favor of lowering rates right away?
It's not quite the way I would put it. I said that's why we think policy should be restrictive, is because inflation is above target. When we have risks to both goals, one of them is farther away from goal than the other, and that's inflation. Maximum employment's at goal. So that means policy should be tight, because tight policy is what brings inflation down. If you came to the view that the risks to the two were more in balance, that would imply that policy shouldn't be restrictive. It should be more neutral, more a neutral stance, and that would be somewhat lower than where we are now. No one knows exactly where that is. So that's the framework I think I'd be taking, and we'll just have to see. We're going to be obviously looking at a lot of data in the next cycle. It is one of the cycles where we have 2 employment and 2 inflation reports, and we'll see where that takes us.
Jeff Cox.
Thank you, Mr. Chairman, for taking the question. Jeff Cox from CNBC. A metric that you like to cite a lot is the final sales to private domestic purchasers. That was down to a 1.2% gain in second quarter from 1.9% in Q1, suggesting that there's some softening in underlying demand. I just wondering if you look at that, you combine that with some of the housing numbers, the weakness that you acknowledged at the top of your remarks, that the housing market is in fact weak, and the inflation numbers from GDP today came down to 2.1% for headline, 2.5% for core. I'm wondering how much more movement you would need to see from these data points before you would be comfortable with cutting in, say, September.
It's going to be the total. Hard to answer that specifically. PDFP, I think, for the first half, private domestic final purchases, or final sales, as people call it, was 1.6 on the first half. GDP, I believe, was 1.2%. That's the whole half. You mentioned the quarters. So those are slower, but GDP is bumpy quarter to quarter, half to half, and often gets revised after the fact. The labor market data we still think continue to think is the best data we have on the economy, and that shows a 4.1% unemployment rate. It shows wages still at a healthy level, but moving ever closer to what we would regard as long-run sustainable, consistent with longer-run productivity and 2% inflation. So the labor market is actually still quite solid. Inflation is above target, even ignoring tariffs. It's a little bit above target, and tariffs. So we're watching all of that, and again, trying to do the right thing in what is a challenging situation, because you're being pulled in 2 directions, and you have to decide which of those to go in. And actually, at some point, if they're sort of equally at risk, then you really want to be at a neutral policy stance, which we're not right now.
So it'd be safe to say that if the data kind of stays in line with where it is right now, that you wouldn't be comfortable with cutting in September?
I'm not going to say that. No, I just think we're going to need to see the data, and it can go in many different directions. The inflation data and the employment data, and we're going to make a judgment based on all of the data and based on that balance of risks analysis that I mentioned.
Thank you.
Greg, Rob, for the last question.
Thanks, Chair Powell. Greg Robb from MarketWatch. The Treasury Secretary has said recently that it would be confusing for the markets if you stayed on as a governor after your term as chair ends. And I was wondering if you had any update for us on a decision on that front.
Sorry, I do not have any update for you. Thanks very much, everyone.
Thank you. Jerome Powell, everybody.
There he did it.
I got good news for everybody. We don't have to watch one of those again until September. I'll be honest with you guys. That was the worst. Not because the information was the worst. The information was absolutely nothing. Again, another nothing burger. I don't, I never get my hopes about the rate cuts until it's a time, right? So I never get my rate cuts, my hope about that. I feel like Jerome Powell is getting, you guys are going to say that he's always been restrictive and doesn't say a lot. I feel like he says less and less every meeting. Like, even if you go back 3 or 4 meetings ago, even though he wasn't fully dovish just yet, it was like you could feel it coming. It felt like he was answering questions in a more organic fashion. Today, sports fans out there, do you remember when Marshawn Lynch was fined for not going to the press conference meetings? So he just started saying one thing over and over again, like, I'm only here so I won't get fined. I'm only here once I get fined. At this rate, next meeting, Jerome Powell might just start doing that. I'm only here answering questions so I won't get fined. Like, he just is saying less and less and less and less actual information every single meeting.
Yep. Tim, it's almost like he has senioritis. And he knows he's out, regardless of whether or not he resigns or if somehow they fire him. He knows he's out. I believe in April of 2026, his term just naturally lapses. He won't be the chair anymore. Now he has to make a decision if he's going to stay on the FOMC board, because he is entitled to stay on the board and be a rotating voting member, but he won't be the chairman anymore. That'll likely be Waller or Bowman. I would consider them to be in the lead, considering they are the most aligned with President Donald Trump, who will be making that nomination.
Yeah. Let's take a quick look at a couple things here. Let's go ahead and take a look at CME early projections for September. Just so you guys know, next meeting, September 17th. Oh my word. This has shifted from earlier this week. For the first time in quite some time, we are now leading. The expected outcome of September is no cuts. Right? This has been living almost more in the 50 to 60% range, more closer to 60% range of we're going to get one rate cut, 25 basis point cut. We are now seeing a 51.8% chance, according to CME, that we will be staying still. What is Polymarket saying? Let's go take a look at Polymarket real quickly. Fed rate in September, Fed decision. Let's go over here. It is looking to me. All right, so Polymarket hasn't adjusted just yet. CME's adjusted, 51% saying there will be a cut, 48% saying there will not be a cut, but that's pretty on par with what we've seen over the last couple of months. Not months, let's say weeks, last month and a half or so. But CME has shifted to a more hawkish, we might not get a rate cut in September at this point. Now, again, I think something, let's go full screen here, something to be aware of. For the first time, we have 2 dissenters. I think that might have been the only time that there was some peak in interest, even from Jerome Powell. Like, it's like he was almost excited about that aspect to talk about it. Everything else was so mundane. I'm not answering that. We're looking at data. But he referenced the dissenters, and they explained their positions well, and he thought it was a really good meeting, yada, yada, yada. At the end of the day, that's a shift, right? So we now have 2 people. How many more people will join that side in 2 months? As he said over and over again, they're going to look at 2 different rounds of unemployment numbers and inflation numbers. I think logic would say at this point, it's pretty evident that inflation is not in trouble with all the tariffs, but I would imagine after 2 more, if it stays quite the same, it's going to be pretty evident tariffs aren't going to have a massive impact on inflation either. But again, I'm not one of the Fed members making that decision. Before we take a look at the charts and wrap up the stream here, Shrum, give me your takeaways. My big takeaways: boring, 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 nothing burger. I thought maybe he would give us a little bit more insight in the future, but it actually seemed like he wanted to stay as far away from talking about the future as possible. Effectively, he knew he had to be there for 45 minutes on that podium, and he stayed for 45 minutes and got the heck out as fast as possible. Any other takeaways from your side?
I pretty much just co-signed that take, Tim. It was a big nothing burger, but during the presser, there was a very important crypto document that was released. Very important in that it was anticipated. I don't know how much there was to pull out of importance, But before, and I'd love to talk about that. Before we transition into that, though, I'd like to make everybody aware that Crux has put out a new video. So, if you go over to my screen, you can actually go watch this video. This is how Crux became a crypto millionaire in his 20s and what he would do differently. I'm extremely excited to see this video. I have not reviewed it. This is going to be a really, really awesome one. Crux does a fantastic job, and his videos have just been getting better and better and better. Drop a 1 in the chat if you've seen his videos from what was called, it was Alpha Broz, and he has had a rebrand as well of his channel. But go ahead and just stay tuned to this live stream, and you'll be directed straight into the premiering of that video. So stick around, and you will be able to watch how the heck Crux became a crypto millionaire, which is one of the things a lot of people are in the space to become, is a millionaire. So, but Tim, getting back to the crypto report, did you have any time to kind of glance over it? I know we were watching Jerome kind of drone on.
I looked a little bit, looked at a couple people's different things. Ultimately, it really kind of came out with not a lot of splash, and that's not abnormal either. We've talked about it on this channel as well. If you're a crypto enthusiast and you listen to these massive announcements where Donald Trump or someone from his staff says, man, some big news coming in the crypto front, occasionally there's something, but for the most part, we're aware of a lot of the information. We're aware of a lot of things happening. Crypto YouTube, Crypto X, we are not the desired target for Trump's big crypto announcements. He's more talking to the bankers out there. He's more talking to TradFi investors who maybe are still on the edge about getting into crypto, right? So nothing was broken with any type of, I'll let Shrum kind of break it down. I don't know if your screen is shared for you to break it down, but it sounds to me like crypto people, it's a nothing burger, right? It's kind of things we expected. It's not bad. It's all good news. I think there was rumblings and rumors from crypto enthusiasts saying maybe there'll be something in here about the strategic reserve. Maybe he'll tell us how much Bitcoin's being held. Maybe he'll tell us the exact plans on how the American government is going to buy more Bitcoin. If that was your expectation, nothing burger. None of that's in there. From what I understand, there's concepts of things like, we're exploring ideas on how to strategize acquiring new Bitcoin, but that doesn't mean taking gold. Like, that rumor's out there that they're going to trade some of their gold holdings for Bitcoin. That's not in there. They're going to just directly buy it using taxpayer money. That's not in there. I think crypto people are going to see it as a nothing burger. I think the bullish side of this is that it's another envelope opening for TradFi investors and non-crypto enthusiasts to say, oh, wow, man, the Trump team just continues to deliver on this crypto stuff. Man, crypto's a big deal. I got to get me some crypto here, right? That's the good side of it, but nothing new, nothing crazy. Shrum, you can correct me if I'm wrong, but is that your take on it as well?
Yeah, it's essentially my take. And to be honest with you, I did anticipate, and I talked about it in our morning news wrap for folks who are in our trading community, which, Tim, I'd love for you to tell folks watching now more about the opportunities in our trading community. But every morning I talk about the morning news. And that was one of the things that I talked about this morning was, man, when are they going to announce the buying schedule, the SAT stacking schedule that the government is expected to do? And, one of the theories that I kind of put forward, and some other folks were talking about it yesterday as well, was that if I'm President Donald Trump, this may not be the best time strategically to announce something that big because of midterms. Right now, we are too far in the past of what the memory will be in the future for the constituency that is Bitcoiners, that is crypto. Put simply, by the time the midterms get here, and the Republicans who are in power really want you to vote for them, you're going to have forgotten the fact that they announced their Bitcoin buying schedule, right? So you wait, right? If you're President Donald Trump, strategically, politically, to know that you're going to win the midterms and keep the Senate, keep the House, you wait to release that kind of information much closer to the midterms. It's a carrot and a stick strategy. You keep dangling the carrot. And Tim, I, for one, will keep marching forward and keep in anticipation of that stick. I think it's coming. How do I know it's coming? If you go over here to my screen, there's a bit of a hint here. Just 10 minutes ago, Bo Hines, who, let's look at his official, he's the executive director, President's Council of the Advisors for Digital Assets. He said this. He said, indeed, to Bitcoin Magazine's post, it said, White House officially publishes digital asset report saying they will, quote, develop strategies that could be used to acquire additional Bitcoin for the reserve, right? So what do I read that as? Bo Hines, he is probably extremely, he's the most disappointed, right? He is the most impatient here. He's like, guys, look, the whole reason I'm here is to develop a strategy, to employ the strategy. My guess is that Bo Hines and David Sachs, the crypto AI czar, they already have a robust plan of how they can acquire digital assets such as Bitcoin, Solana, on down the line on behalf of the government. But it's not a plan that can be deployed now for political reasons. All has to do with the midterms. Donald Trump, Scott Bessent, Howard Lutnick, they all hold Bitcoin, right? They obviously have the same incentives that you and I, listening to the sound of my voice, do when it comes to ownership of these digital assets. But politically, it is not the best time to do this, Tim. That's kind of my take. Bo Hines hinting that it's coming. It's coming. Yeah. Just be patient. They are developing the strategy to do it. And maybe it does take this long. Maybe maybe we're not giving enough credit. Maybe they need to dot their I's and cross their T's and it takes a long time. But my guess is that it's all about midterms. They want to be shiny. They want the grass growing and they want that carrot dangling in time for everybody to go vote Republican.
You know, I think I'll comment on the mood, I think, within the crypto community. We're tired of hearing, keep waiting. We're tired of hearing, be patient. You know, a lot of people just have that attitude like, you told me this was going to be a bull market. You told me this was going to make me some money. Oh, you told me that Donald Trump was going to be the president that pumps my crypto bags, and people are impatient. I'm not saying that's where I am. I'm saying that is the mood in the room. But put a 1 in chat if I just vocalized your inner monologue when it comes to what Trump just said as a mood right now. Just keep waiting. You keep getting told, just keep waiting, just keep waiting, just keep waiting. I want you to know, we hear you, we feel you. That I would be lying to you if there aren't internal thoughts in my brain that are like, could this thing just go ahead and take off and make me some money, right? I got some plans. I got some things I want to do. The reality of investing, the reality of what we are in right now is a situation that makes the patient benefit long-term. And those who are only in it for the short-term gains, they are going to get weeded out. You know, it makes me think about when you were younger, Shrum, did you ever do like the presidential physical fitness tests? You know, you had to run so far in so amount of time. You had to do this amount of push-ups, this amount of pull-ups. I remember there's one when you were little, you had to do, you didn't have to do pull-ups. When we were like 5, 6 years old. You didn't do pull-ups. You did the hang on the bar. You had to keep your chin over the bar and you had to keep it over a certain amount of time. I was a super competitive kid. I didn't want any of the other kids to beat me. I would always look at the other kids, right? But there was one kid, never could beat him. Never could beat this kid. And the reality is I was the person sitting here holding on, just looking at everybody else, pretty much saying, I will be the last one here. I'm going to wait for them to drop and then I'll drop. Like I wasn't going to wait like another minute. The minute I was the last person on the pole, I was going to drop. Okay. Because I was only in it to try to beat other people. This other kid who never lost, he had his eyes closed. He just sat there. It had nothing to do with anybody else. He was just sitting there. He was going to do the best he could do it. This kid could hold on for forever. What's my overall point? If you think that you're just going to sit here the way little Tim was on the chin-up bar and you're going to wait for other people, guys, there's these whales and these institutions out there can wait for just about ever. It's only when you finally close your eyes, stop comparing yourself to last cycle, stop comparing, looking around the space saying, I'm still one of the last ones here. You got to make the decision to hold on and hold on tight. Do you believe in crypto or do you not believe in crypto? That's going to be the end question here. When it comes to trading, which by the way, Shrum mentioned earlier, we talk about trading all the time. In that VIP trading group, we teach people when is it right time to put a little leverage on the table? When's the right time to buy? When's the right time to sell? Where do you put your stop losses? If you want to learn that game, that game's all about in and out. When do I long? When do I short? But if we're talking about long-term holders, a lot of you guys on here are long-term holders, but you're sitting here saying, I want the top of the bull market. I want to take profit. I want to run. Stop looking around. Close your eyes. Look at the charts. Don't call yourself a weak-handed person, long-handed person. Say, I believe in this. I'm looking at the fundamentals. I understand what the future looks like. Even if I can't feel or see the adoption of institutions. I know based off the research I've been doing, institutions want to go in very big, very strong. I just don't know when. So I'm going to stop looking around the room. I'm going to stop looking at who else is hanging on the bar. I'm going to say, you know what? I'm in it for the long haul. I'm closing my eyes and I'm holding on for dear life until I literally can't and my fingers release. That's the attitude you have to get, because right now, I guarantee there's this bigger, stronger kid called the Bitcoin whale over there who's laughing at all the weak kids who are struggling, who are looking around the room. Lock in, hold on tight, and guess what? Eventually, there will be a massive bull run. And by the way, I want to make sure we're clear here. There's been big bull runs, right? If you just jumped in, go to my screen here, Smay. If you just jumped into the world of crypto, let's talk about Bitcoin here. Go out to the weekly chart. Yeah, if you just bought the other day, you're struggling. Right? If you only bought back here in May of 2025, yeah, you bought it around 110, you're in profit, but this isn't all the great run you thought you could have. We have been saying buy for a long, long time. I'm not going to say we were the channel saying buy exactly at 15. In fact, I at one point remember talking on the channel saying, I think there's a decent chance 13.3 looks interesting, right? But we have been saying buy. Not buy. We have been telling you to buy. And people who bought back in here, you're already doing quite well. Now, on the altcoin front, not all you're doing so well. Depending on what altcoins you bought, some are up majorly, some are not up majorly. But the long story short is if you're in a strong fundamental project in the world of cryptocurrency, if your coin is a coin that VCs and institutions have a massive plan on the horizon, sometimes you just need to close your eyes for a second. Stop comparing yourself to everyone else in the room. Don't just look at what the chart's done to you recently, right? If I were to come in here and look at the 5-minute chart right now on Bitcoin or Ethereum, let me full screen it. That's not a good-looking chart, right? That chart is ugly. Now, I will say there's nice high volume right there on that bottom position. It does look like a little local 5-minute bottom, but I digress. That's a very bad-looking chart, right? When I look at it like this, doesn't look like anything bad has happened whatsoever. This looks like a chart that's just nothing but bullish. And that right now, guys, is what Ethereum looks like. That is what, I saw someone say, oh, Link's getting torched. Link, zoom back out here a little bit, guys. I'm not saying it's explosive as Bitcoin, but, just in June of 2023, 2 years ago, we're down at $5 per coin. And it's got a lot higher to go here. Ultimately, you guys got to lock in. I know you're tired of hearing, hold on, be patient, but you want to know why that's the best advice is because it's the advice that the whales and the institutions are taking. They're okay with waiting and holding their Bitcoin and their Ethereum and their Chainlink and their Cardano and their AVAX for years, plural. Whereas a lot of you guys are thinking, man, I'm going to buy in right now so I can sell it in September. I'm going to make $1 million. If that's you, I'm sorry. That's the people that are going to lose. That's the people that are going to lose in this long-term investing game. We can trade it. We can wait for buy signals. There's no major buy signals right now, so don't enter me major long. But if you're looking at the long-term game, you got to play the long-term game. Close your eyes, hold on to the bar, and you'll succeed. We'll tell you when to wake up. We'll tell you when to open your eyes. In a nutshell, someone asked here, let's do some wrapping up here. What are some levels to keep an eye on? We talked about this before we went live. Not before we went live, in the beginning of the live stages. But I told you earlier, we could go through and I could look at 100 different altcoins, which, by the way, every single day we are going live. Me and several other pro traders in our trading group look at a bunch of altcoins. We look at the best trade setups. We look at the best long-term deals. So if you want to see altcoins individually, come over there. Otherwise, wait for videos to come out on the channel. But if you had watched my video from yesterday, I told you guys a pullback should be coming. And what we're seeing happen right now, especially in light of a nothing burger from Jerome Powell, that's pretty much what we're getting right at the moment. If you go to my screen here, once again, Smay, Bitcoin, how low can it go? Well, let's stay within a short-term bullish structure. Bitcoin at the moment is in a falling channel that could drop down here towards 114.3, okay? We are still above a trending support level as long as we stay above that red line. That's short-term bullish. Longer-term bullish, again, is there the beginnings of kind of a sell signal on the daily chart? Yes, there is. In which case, I told you guys, I didn't actually say this in yesterday's video. I said this in a live stream last week. 112 to 111.7 could make a lot of sense for Bitcoin to pull back. Pull back down here towards the highs from back in May. Pull back down to that daily smart trail where Bitcoin historically does like to pull back during these bull trends. As long as we stay above this blue line on Lux Algo, we're good, right? When you flip over and you look at the Ethereum chart, I told you earlier, again, Ethereum, while it's pulling back here right now on the daily chart, Ethereum is one of the few coins holding up actually pretty nicely. There's a little bit of a bearish divergence I want you to be aware of, where we did put in a lower high on the RSI and the Luxago oscillator with higher highs in price action, but during a bull trend, that's pretty normal. If the daily chart bubble does pop, there is this really big money flow that's curving over. There's two charts I'm looking at. I said this in the video yesterday, but daily chart, we're looking at a $3,400 Ethereum. By the way, I want to make sure I'm clear on this. I'm not predicting with certainty ETH gets down here. What I'm saying is it would make sense under bullish circumstances, would make sense for ETH to drop all the way down here to 3,400. In fact, I'll go a step further. We're saying, hey, Tim, how low can we go and still be bullish? I think the 2-daily chart could suffice with a sell signal somewhere closer to 3,000 as a target. And you zoom out here, that's still higher highs and higher lows. Now, do I think ETH is going to drop down that far? No, I don't think so. In fact, during a bull market, what we're known for is to get these sell signals, which under boring situations or bear trends are extremely reliable. You have to take them with a grain of salt when it comes to bull markets. But I think it's not unreasonable to say 34 to 3,000 ETH is still bullish in those situations. I think you're looking, if you're an ETH holder right now and saying, well, where's my next buy level? You can make an argument somewhere here on that 4-hour. Let's look at the 8-hour and the 12-hour are going to be my other ones. 8-hour coming in at 35.50, and then 12-hour coming in here, pretty much same level. So I don't know if I'm even waiting for 34. I think I'm a buyer of ETH closer to 35.50, where the 12-hour and 8-hour smart trails are. But I still won't be bearish. I still won't be running for the hills, even if we drop to 3,400 or, again, 2-daily chart. I still think, even though I don't think it's likely, I wouldn't freak out at a $3,000 Ethereum. So that's where I'm at the moment. I saw someone asking for some other coins. Again, we're going to wrap up this stream here pretty, tightly with a nice bow here. But we look at XRP pretty much every single day, Corey. We're very bullish on XRP. If you want to hear more about it, I know that some of you guys say, Tim, I want it here on YouTube. Well, guess what, guys? We'll cover a lot of these coins. Again, I actually did a lot of TA in yesterday's video, 10 coins that I'm buying right now. But if you want to go deeper, if you want to learn how to trade, if you want to get involved, I don't think there's a community out there more engaging and more active than us. I am live almost every single day. I have other pro traders live every single day. Shrum does live news. We are doing so much over there in the VIP trading group. If you are new and you are learning how to trade and you're saying, man, I need to learn these technicals, I need to learn all this, I highly recommend go click on the link and check out the Academy. Yes, it's $100 a month, but I encourage you guys, learn as fast as you can. Right now, you can go in 1 month, go through all of our videos, learning how to do basic technical analysis. Then guess what? Downgrade to the essentials. Just be a part of the group. Be a part of our trading group with those daily live trading sessions. Be a part of the education process. Ask us in chat. It's not just me who knows how to do this stuff. Our community is amazing. If I don't get back to you in time, somebody else will get back to you with an answer to your question. There's no one better than this Tim Warren trading group. Again, we were the bros. We still call each other the bros, but it is the Tim Warren trading group. Go check it out right now with the link down below. When it comes to everything else, pullbacks, they're part of the bullish game. They're part of the bull game. Jerome Powell gave us nothing in this press conference to say that's the reason we're exploding to the upside. It doesn't mean the rally's over. It just means opportunities are around the corner. The people who want to win the game, they're going to buy. They're going to buy the dips and take advantage of the opportunities. People who are going to lose, they're going to cry, they're going to fuss, they're going to complain. They're going to ask, why is this happening to me? I encourage you, be a buyer of the dips. Hold on for dear life. If you don't have dry powder, just hold. Hold as best you can. With that said, that's all we have for you in today's live show. We'll be back on Friday, unless some of you guys know my wife is days away from a baby coming. We'll keep you posted, but unless there's a baby here by Friday, we will be live Friday at 3 p.m. I'll see you guys over there. See the rest of you in Discord.